Hey there, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today, we're going to be talking about annuities and specifically what $850,000 will pay out every single month. So I love annuities. I think they're very important as far as your portfolio is concerned. Obviously, I am biased because I sell them. But I also love the stock market. I love being able to be in other things as well because I can get growth, but I can also get the guarantees from annuities. And I talk a lot about that in my videos. So today specifically, we're going to focus on $850,000. Although you might have something that's less than that or more than that, I would invite you to go to my website, johnstevenson.com, and you will be able to use my calculators. And then you can determine exactly, what amount you want to put in, what your age is, whether it's a single payout or a joint payout, and when you want to take income, whether it be now or whether it be later. So it's going to show you everything that's available. It'll show you the highest payouts. It's not going to hold anything back. For this scenario though, for this example today, we're going to be actually looking at an income rider. An income rider typically pays out the highest annual amount versus a SPIA or a DIA. Those are good as well. They just are different. They're for different purposes. They still give you lifetime income, but they can give you lifetime income, but also give you like a 10-year, 20-year, or 30-year period certain. You can add guaranteed COLA options, cost of living increases. But in my opinion, you can also, you can definitely do that with a SPIA or a DIA, but you can also do that with a fixed index annuity with an income rider, with an increasing rider, or you can do that by buying multiple annuity contracts. Okay. But let's talk about what $850,000 will give you right now. So looking at my screen, I've got $850,000. It's a married couple. Most of you are married, but some of you are not. And if you are not, you're just going to have a higher payout, which is great. So single payouts are higher because the insurance company is not on the hook for 2 lives. They only have to pay out for 1. All right. So, and I'll show that to you as well. So $850,000, this is immediate income that we're looking at first. Now, you did not give the insurance company enough time to grow it, so you don't have as high of a payout, but it's still a decent payout. All right. So Prudential is the highest, followed by Gillico, followed by Corbridge and Nationwide and all these other companies. Okay, there's a lot of different options available. So, but if you're looking for highest payouts, Prudential is the highest. And they're giving you $55,000 for life. So let me show you what that looks like. So life expectancy for a married couple, one of them should live to their mid-90s. So 95, you're taking out $2 million. Okay. If you live longer or your spouse lives longer, you get more income because this is a life contract. Okay. All right. Now let's go back and say, if you waited 2 years, and let's say you want to wait 2 years to take income because you're waiting for Social Security to start. Okay. If you do that, the income is higher. Clear Spring is paying you $66,387, and this is joint. Pretty good. Okay. Now let's say we wanted to wait till 65. That's when Medicare starts, and you're thinking, I'd like to start income at that time as well. Well, Nationwide is beating out Clear Spring by just a hair, but they still are. And that's a pretty good payout, $88,506. So if you look at that, again, this is joint. Start income at 65, 88,000. Let's see, by the time you reach 95, you're taking out $2.7 million. Okay, pretty good. If you live longer, you take out more. So you're probably looking at these contract values and wondering why they go down. It's because it's an income product, and income riders are for income. They're not for keeping the account balance intact, okay? Because the account balance is going to go down. You're going to have income that influences. You're also going to have the interest rate, whether it earns it or doesn't, is going to influence how long that account balance lasts. And you also have the rider charges. See the rider charges over here? You're probably looking at that and saying, well, that's a lot of money for rider charges. It is a lot of money, right? I'm not going to dispute that. But if you look at that and say, all right, well, rider charges over 15 years, some of them, let's see, while it's growing the benefit base here, it grows the benefit base guaranteed to like 1.5 million, then multiply by 5.95. So the rider charges, that's why you buy it, because the income rider is giving you 25% base bonus plus 8%. That's the value of the rider. So the rider gives you the base bonus plus the 8%, which grows this $850 to almost $1.5 million. That's why you have such high income. If you took it out earlier, here's what it is for Nationwide. But we already know if you took out earlier, you probably choose, maybe Prudential if you did it immediate, or Clear Spring. But Prudential, if you look at Nationwide, it's just a great option for a 5-year deferral. Okay. So that's just important when you're looking at costs. You think, all right, well, that's a lot of money. Let's see, 15 years. Let's say 15 times 17,500, just trying to equalize it out a little bit. 262. Let's say it's like 280 in total fees. Okay, so $280,000 in fees. You're like, wow, there's a lot of fees. Yes, it is. So we'll say, well, I don't want a rider fee. Okay, what's the lifetime income without the rider fee? $51,000. So 51,000. So that's 88 minus 51. It's $37,000 times 30 years. That's $1.1 million. So you look at that and say, all right, well, I paid a ton of fees. I paid a ton of fees, right? 280 grand in fees, but I got $1.1 million. Okay. What is that net? It's like $820,000 net. I would trade that all day long. If I'm looking for highest income and I don't care about my account balance running out, that's what I would choose. If you care about your account balance running out, then pick the no fee option. Your account balance will last longer. Maybe it'll last till your 90s. See, that's great if you want to leave a legacy from that account. But most of us, when we're doing this for income, we don't want that. We want highest pension income, and we'll use the rest of our investments for legacy. That's, in my opinion, the best way to do things. You need to separate things out. You need to have money over here for your pensions, and you need to have money over here for your growth. That's the best way to do it. I mean, people will get hybrid annuities, and I did create a video about this, but you really don't get the best of both worlds. You get the worst of both worlds because you don't get as much income, you don't get as much growth anyways. Your account balance will last a little bit longer, but it's just better if you want growth, put it in a growth annuity that gives you a ton of growth, doesn't give you lifetime income, but gives you a ton of growth, and then put your pension money into an annuity that will give you the most contractual guaranteed income for life. So that's just my opinion. All right, so let's go in here and let me just show you a few more things. So if we were to, let me just take this no rider fee off, assuming you want highest income. And then we'll say, what does this look like if I wait till 67? Okay, I want to take full retirement from Social Security. Well, now we're at 100 grand. Okay, great. Let's say move it to 70. 135,000, pretty good. Nationwide they're definitely not the most competitive. After 10 years, they start becoming less competitive. They're still pretty good, but if you're looking for highest payouts, Clear Spring, Delaware, and American Equity are the best for sure. So, and again, Clear Spring is just good because they're giving you the roll-up rate longer. They're giving you like 8%, and they have a pretty decent withdrawal rate. So yeah, you can see that. Benefit base just going. They do it for up to 12 years. That's why it works so well. And so you've got the benefit base worth 1.9 million multiplied by 6.85, giving you the 135 grand. If you take it earlier, here's what it is. If you take it earlier in earlier years, you might buy this thinking you're going to take income that late, but then you might decide to activate it earlier. You can. And that's what's so great about an income rider. They are super flexible. You're setting yourself up for guaranteed income. You're locking in this rate of growth. And then you can decide later on when you actually take the income. And when you actually activate it, I'll give you paperwork for that. It's like 4 pages. Okay. You're going to select a single or a joint, and you're going to put in your bank information so that they know where to put the money. It's that simple. So I love income riders because of that. They're flexible. And if for some reason you want to just cancel it, that's kind of nice too. They got an account value. See right here, cash surrender value. It's a little bit less though than the account value because there's surrender charges over the first 10 years. That's why you want to put money in here that you don't want to access for anything else. Okay. Otherwise you don't want to do it in the first place. Okay. So that's really important. And I'll show you that. I mean, if you want to look at surrender charges, I'll show you right now. There's the surrender charges for 10 years. Okay, and this is pretty typical. You see it going down over that time period. So if you go down, let's say 6 years, and you're like, oh, I don't want this anymore. Then they're going to charge you 5% and take your money out. Okay, so maybe your account value is worth, I don't know, $897,000. Okay, so they're going to charge you 45 grand. Take your money out. So yeah, it's not gonna feel very good. But really, the biggest loss for me is not that. It would be the benefit base, because your benefit base is worth $1.3 million. You can generate 86 grand at that point for guaranteed income. I don't know about you, but if you can find something that's guaranteed, contractually guaranteed from 850,000, that will give you 86 grand for the rest of your life. Send it over, but you won't find it. Okay. That's why these annuity contracts are so lucrative. They're so valuable because yes, you are paying a fee. You are paying those rider charges, and you can see them right here, but they're giving you a whole lot for it. Okay. So you just have to ask yourself, is that worth it? Do you want highest income, and are you okay with your account balance going down? Or if you're not okay with that, then get something that's not as high of an income and your account balance lasts longer. Otherwise, you can always buy a MYGA. Okay. If you look at the MYGAs, those are fixed rate products. They're paying pretty good right now. I mean, you can look at top MYGAs right now. I'll show you what they are. Now, if you're buying it to get income later on, the MYGA is not going to be the best, because you remember the 10-year option. What does it grow to, like $2 million? And that's the benefit base, right? That's pretty good. If you do the same thing with your 10-year MYGA, yeah, it's going to grow for sure. You can see right here, grows to what? 1.451. That's pretty good. $1.5 million. But you take that out and turn it into lifetime income, that's a whole lot less than $2 million it's going to give you on the income rider product. See what I mean? So it just depends on what your goal is. If you just want to strip off the interest, you can see it's pretty good. You can get $46,000 a year. Otherwise, you can let it compound over the time period. So there's a lot of things you can do. The goal of this video is not to try to convince you to buy an annuity. Okay. I make my commissions from selling annuities. The goal of this video is to show you what's there, what's available. And you can decide for yourself if it's right for you. If it's not, fine. But if it is, and you're thinking, I would like an annuity as part of my portfolio, then book a call. There is a link below this video. It goes directly to my calendar. We'll get on Zoom, and we'll take a look at my screen, and we'll look at everything that's available, and I'll answer your questions. If you want to just look at these first, then go to my website, johnstevenson.com, and check out the payout rates, and then you can book a call there as well. Okay, really important. Transparency is important. It's important for you to see everything, so you're not being sold something that's high commission and low income for you. Okay, let's see one other thing. Let me go back here. Go back to the income rider. I wanted to show you one thing here. If I just scroll this out, I'm just pull this out 65 again. Okay, 850 grand. All right, this is joint. I was going to show you a single payout. Yeah, let's look at that real quick. 88,000 to 93. There's a difference. So they're not on the hook for 2 lives, only one, and because of that, it's $5,000 more. Okay, but the risk to that. Okay, the risk to that is if you die and you're married. Okay, your spouse is not going to be very happy with you if you die and there's no account balance. See here, you take 93 grand out, and after so many years of taking income, you die, and there's no balance. They get no income and they get no account balance. There's no refund, no nothing. Okay, that's why I'm saying take the smaller payout, take the 88 grand. Okay, and the 88 grand will continue to your spouse forever. Okay, the account balance will not be there, but you're doing it for the income. So just my recommendation on that. All right. One other thing is I have this box clicked right here, no income reduction. You're probably wondering what that is. Well, this is showing the highest payouts no matter what. They never go down, never reduce. If I unclick this, it's going to show you higher payout options. There you go. Corbridge, which is American General Life. You got Emeritas, you got Athene. Sometimes NASA pops in there. You can see one here from Global Atlantic. But see this? They're going to pay out a high payout, 110 grand. This is great for bridging an income gap. Maybe you have a pension or Social Security starting in so many years from now, and you're thinking, I would like to have a higher payout from now, or whatever time period. Okay, I want it for this time period, and then I'm okay with it going down because I got another pension kicking in. See what I mean? Then it's going to do that. It'll pay you a higher payout, but then it's going to drop drastically. 110 to 73. So that's a big difference. Okay, so if you're not looking for that, don't buy those. You'll notice in my income rider calculators, it shows everything. It'll show those as well. I just wanted to make you aware of that, because a lot of times the top 3 options or so can show those accelerated payouts. That's what we call them. So you can see here $110,000, and it drops. See that? So most people do not like that. I don't like that. So anyways, I just want to make you aware of that. And then if you're thinking, well, I want to take income right now, but I want an accelerated payout right now, and then I'm going to start Social Security at age 65, then you can see right here, 68 grand. Well, pretty good. Pretty good. Again, this is a single payout. Let's go back to joint. A little bit less because it's joint. And Athene, they're actually pretty decent for accelerated payouts. So they'll give this, for 10 years, 60 grand, and then they drop it to 36. This is a good option if you're thinking, I'm going to take this high income now, and then I'm going to wait for my Social Security to start at age 70. This is great because I'm going to have higher Social Security. I can have higher income now, so I can retire earlier. And then my Social Security is going to kick in at age 70, and I'm okay with this income dropping to 36,000 because my Social Security is going to be higher. Okay, in this case, it might not be a bad option for lifetime income. So it just kind of gives you income like for the go-go years or for bridging an income gap in the beginning. So anyways, I just want to point that out because when you go to my income rider calculator, you're going to see some of those and it's not going to say accelerated. I can't figure out how to figure that out. I just can't figure that out in my calculator on filtering those out. So they're there. Anyways, it shows everything. It's very transparent. And I'd be happy to sell you an annuity. I'd be happy to answer your questions about annuities if you're looking to purchase one. Go to my link below. It'll go to my calendar. Go to my link on my website. It'll go to my calendar. Otherwise, if you got questions, make sure you comment below. I'd be happy to answer them. And if you like the video, make sure you click the like, the subscribe, the share button. And I really appreciate you for watching. I hope this video has been helpful, and we'll see you next time.